My name's Shaun Day. I'm Managing Director of Greatland. And as most of you might be aware, we're London listed, so a little bit unique to present here at Diggers. But our team is based here on our asset up in the north of Western Australia. So we think it's a great opportunity for us to broaden our profile here. In terms of Greatland, look, our flagship asset is gold copper Havieron deposit. This sits just 45 kilometres to the east of the existing Telfer gold copper mine. We're in joint venture there with Newmont, the world's largest gold miner. And it's a reasonably very significant deposit. It's already 8.4 million ounces, that's gold equivalent, and it continues to expand. In addition to that, we've done a farm-in and joint venture agreement with Rio Tinto. We like to think we're kind of a joint venture partner of choice in that Paterson region, where we've effectively the manager of that land, and that centre of gravity is all within that 60-kilometre radius of Telfer Havieron infrastructure. We have in place support with the banks, Tier 1 banks, ANZ, ING, HSBC. Their support's greatly appreciated, and we've been building out equity support, the institutional shareholder base, and that's headed by Wailu, who's come in as a strategic investor. I think it's always good to orientate around our strategy. We have a very clear 3 horizons in our strategy, which is to deliver an expanded Havieron, continue to invest in the drill bit. We think there's a lot of option value in that portfolio that we can unlock, and of course to continue to expand Havieron. And then thirdly, in a financially disciplined way, we're open to accretive acquisitions and business development opportunities to further build that growth profile within the company. The team. Look, the team's been a huge part of Greatland. I think we've been very successful in being able to attract top talent into the organisation. In terms of my own journey, I've been really fortunate to be part of Straits Resources, then Sakari up on Singapore Stock Exchange, and then Northern Star. All of them I joined as relatively small mid-caps, and we grew them into multi-asset, multi-billion-dollar platforms. And the one common feature of all those 3 organisations was just being part of a really good team. In each of those, I was part of the C-suite, but I was surrounded and part of a great team of people. And I like to think that's what we've been able to replicate at Greatland within that management team. In addition to that, look, we've also really focused on creating a board. Mark Barnabar, who I've known for a long time, is our chairman, Elizabeth Games, deputy chair, but equally we have some really tremendous operating knowledge on our board. Jimmy Wilson, probably 2IC of BHP for a long time, Paul Hallam, who's out of Newcrest once upon a time, and Clive Latcham, who was Rio Tinto Processing. So it's putting together that team that's been so important to us. And actually, just while I'm on team, former Greatlandian, John McIntyre, his daughter Annabelle, won her 2nd Olympic medal at Paris, so we're all together on Friday night to cheer them on. He remains a friend and an ongoing source of exploration kind of guidance to us, so really celebrate for the McIntyre family. This is just kind of puts our Havieron discovery in context. It's really the discoveries, this century over the last kind of 20 odd years. And we just think when you look at that, and this is rated by Maiden Resources, but Greatland compares really favourably on a size, but also particularly on a grade profile. And this is against, the Tropicanas, Guiers, Hemis. We sit in that ilk of deposit, and I think that's a great credit to the team that's put this together. In terms of development, I'm just going to focus kind of where we sit in the Australian sector. And we sit there right next to Hemi. Look, that De Grey asset, it's a good team of people, it's a cracking asset. That's a big open pit. They're a little bit bigger than us in terms of size. We're underground, we have the higher grade, but both of them are world-class assets. And we think it's great for the sector to have these two world-class assets coming online. And I think it's a great opportunity for our shareholders to be part of developing an asset of this calibre. Just looking at the asset itself, it's already under development. So we're around 340 metres, that's vertical depth, about 415 metres to the top of the ore body. So we're just over 80% advanced in that decline development. In terms of surface infrastructure, we're actually just building some additional evaporation ponds as we speak. In addition to that, we will put in a paste plant ahead of stoping. But this is really, being 45 kilometres down the road from Telfer, we can leverage all the infrastructure that's there. There's a processing plant, power generation, stores, critical spares, bitumen runway or airstrip, and a lot more. So this is effectively a relatively low risk greenfield development to take advantage of that existing infrastructure. In terms of the deposit itself, this kind of just shows the block model in the cross section there, and I think to notice there it's subvertical. That's really good. Gravity is your friend in underground mining, but also that consistency and the blocky nature of this. I'll talk to the mining methodology later, but it allows us to really kind of develop this on a big stope basis. And when you look at the growth of that resource, we've been able to, as we've grown to 8.4 million ounces, we've been able to maintain 100% compound average growth rate as we've continued to drill out that Havieron ore body. Looking at this part of the ore body, so the red there is the indicated resource, which is effectively the high-grade southeast crescent. Helpfully, that high grade also sits out on the edge of the ore body, so we can go straight into that area, which is kind of running plus 4 grams. But really, it's the ounces per vertical metre that talk to the quality of this asset. It's running over 7,900 ounces per vertical metre over a full kilometre of vertical strike length. It's running over 9,100 ounces per vertical metre through that top 300 metres of the ore body. That's where we've got the greater drilling density. And I think on this slide, if you go across to the right of screen, you can see that overall ounces per vertical metre, but on the y-axis, where it's got the bar chart, you see the metres drilled on each of those vertical levels. And what you'll see is there's a correlation between the delineation to JORC standard of ounces and drilling density. So over time, we believe we can make that ounces per vertical metre more consistent through that ore body. It's already tremendously high, but it's really a function of drilling density where we've delineated those ounces. And of course, it's open not just to add ounces at the lateral levels, but it's certainly open at depth. So at 8.4 million ounces, this ore body just continues to have the opportunity to grow. And I think this slide really brings home the quality of the ore body. So this is the conversion of ounces in the indicated into the reserve, which is 86% conversion factor. I've never been associated with a mine, I've never seen a mine with that level of conversion. And what this is telling you is we're high grade next to the underground infrastructure we're installing. It all comes into the mine plan. So that is tremendous. And then what we're able to do with that, these high grades sitting next to infrastructure, is we'll set up a sub-level open stoping, big stopes we'll probably have a volume of 125,000 tonnes. These are big 50-metre vertical stopes, and that's going to drive a very low all-in sustaining cost, lowest quartile. I think in the original study with Newcrest, it was $793 an ounce US all-in sustaining cost. So that creates a margin, sitting in the ballpark of $1,500 to $2,000 an ounce US. I'll just touch briefly on the ownership structure. I mentioned before we're in JV with Newmont, the world's largest gold mining company. In February, they announced the sale or the non-core aspect of 8 assets, or a suite of 8 assets in their suite. Telfer and Havieron were 2 of those assets. So look, that's something we're interested in. We hold a last right of refusal over the asset. We enjoy a really strong joint venture relationship with Newmont, so we feel we're really strongly positioned. And just to close out, I'll spend a few minutes just talking about our exploration footprint. We think we have some really good, high-quality exploration ground, and we're focused on unlocking the option value within that portfolio. I mentioned before, this diagram or this map shows not just our existing 100% owned holdings, but also our joint venture holdings, including Rio Tinto, and the focus of that within the that 60-kilometre radius of Telfer, that installed infrastructure, and there's an Indigenous land use agreement covering that 60 kilometres. That helps accelerate projects hugely well. If you look at the discovery hole of Havieron, I think the assays came back in January 2019. We started the box cut in February 2021. You can't do that unless you have that existing EUA in place. So it's highly advantageous. And we'll be spinning the drill rig out here. One of the things we love about this is the ground we inherited from Rio Tinto. They've done a lot of geophysics across that, identified a large number of tier 1 targets. So we went on systematically work through that over the next couple of years, and we'll start a drill rig spinning there in this upcoming financial year. The portfolio is broader as well. Headlined probably by Ernest Giles. This is underexplored Archean greenstone sitting out further into the east. It's basically the next greenstone structure. This was undercover, not recognised as a Archean greenstone, which have been prolific in the West Australian gold space. It lights up like a Christmas tree on geophysics. It sits undercover, just like our Patterson holdings. We spend a lot of time on that geophysics, so we really like this. And again, we actually completed the land access agreement last year, so we'll have a rig spinning there during the course of the next year. The team's done a great job. We've added Mount Egerton and Yannery. We want to be active portfolio managers of that and look to unlock value for shareholders. So we continue to kind of focus on the exploration opportunities. And just to close out, just to round off, look, we have this gold copper world-class asset in Havieron. We think it continues to expand, and we take that in through development. We'll continue to invest in exploration, both in that Patterson region, in mine, but also the external opportunities, and in that broader portfolio. And we also feel we've developed a really strong financial foundation in terms of having the support of tier 1 banks, which we're really grateful for, plus building that institutional support. Having Wyloo in there as a strategic makes us a credible and capable platform to achieve the opportunities before us. Thanks very much for your time.